Welcome back. This is Corporate Radar. Well, the next company on our show is Prudent Corporate Advisory. We have Sanjay Shah, the CMD of the company, who joins us. Hi, Sanjay. Good morning and good to see you, Ben. Well, first, we'll just tell our viewers the three big talking points that we're looking at. Indus Capital's mutual fund business acquisition rationale. That's what they have done. What's the rationale on that? Will the acquisition be margin and EPS accretive? And also, what's the growth expected from Indus Capital's mutual fund business in the time ahead? Thanks a lot, Sanjay, for speaking to us here on CNBC TV 18. And, before we get on with the rationale about this, I wanted to compliment you. I've noticed in the past there have been some filings where you share some part of, of the wealth you're creating via equity with your staff, with your support staff as well. So kudos to you. I've, observed that earlier this year as well. I think in June 2025, if I remember, the quantum was around 45 crores. So good on that. That said, let's focus on the acquisition that you've done. Indus Capital's AUM is only around 2%, I think so, of your total pie. But the PBT margin's around 7%. So tell us, how do you see scaling up of this business and also in terms of profitability?
So thank you very much, Nigel, first of all, for complimenting. And if you look at, because specifically if you look at as far as mutual fund industry is concerned, I think we have been always looking for the inorganic growth because company is sitting on a significant cash. And this is the business which has been run by Mr. Sanjay Sanghvi, who is the founder. And he has been in this business for almost now more than 22 years. If you look at the entire business construct, they have been managing roughly about 3,500 families, and the average AUM per family would be less than 1 crore. And 95% of assets comes from the long-only mutual fund in the equity bucket. So, and then another important thing is that this entire business has been managed by 15 relationship managers who are there in the business for more than about 15 years. So it's a very, very well-structured business. Mr. Sanghvi was looking for aligning the interest with Prudent, and it was a very win-win situation for us. If you look at from the point of rationale, because Prudent has been very, very strong on the B2B side, but we wanted to give a message to the entire mutual fund distribution community also that if somebody who is looking for aligning their interests with the larger platform, then Prudent is ready to absorb them from the point of business continuity and service continuity to their customer and absorbing the existing talent pool. So I think overall, it's a very good mix for both of us, for Indus as well as Prudent. And another important thing is that I think Sanjay Sanghvi will remain as a core advisor to our organization as a strategic advisor.
All right. The couple of factors that the street likes is the MF AUM per client is substantially higher for the business that you're acquiring in comparison to the core business. And also the acquisition, I think, is done at low teens, in comparison to the multiple that the company is trading at. So I think those are the two big numbers. Give us a few more details. Any kind of debt you'll be taking on board, employees, integration, synergy benefits, if you could quantify it?
Yeah, so I think, Nigel, we have been sitting on a significant cash. If I'm talking about currently, company has 600 crore of cash on hand. And if so, all cash deal may not be 100% money is going at in a one tranche now. So I think we'll be giving about 85 crore now, and rest of the amount will go in next 3 years' time or after 3 years. So the company is not required to borrow anything. Everything is available on the books. As far as synergy is concerned, as I told you, Mr. Sanghvi has positioned himself as a mutual fund expert, and he was selling only and only mutual funds to their customer. So we got a very strong, loyal client base. However, as we all understand that customers' needs are now changing dramatically. So I think the biggest opportunity which we will have would be the cross-selling with the help of their existing 15 loyal team members headed by existing CEO called Mr. Gaurav Gupta. So I think the using our technology platform, our brand, our support, our research, and the multiple product will definitely help us significantly. On the EPS side, it's definitely strongly cash EPS accretive because I think we are investing roughly about 120 crore, but I assume we'll have a cash EPS of about 13-14 crore. However, if you look at the reported profit, because these 120 crore need to be amortized over a period of 10 years. You may not see significant uptick on the reported profit because you might earn 15 crore by way of profit before tax, but 12 crore will probably amortize over a period of 10 years. But overall, it's a win-win situation.
Sanjay, great to speak with you, Prashant here. And, we talk about mutual fund companies, we talk about broking companies, we talk about all other companies, but your business has been, as Nigel also pointed out, a true sort of wealth creator. And we don't talk often enough, but that is only because you don't join us often enough. So I hope that this is the start of many. I had a couple of fundamental questions, right? I mean, beyond this acquisition, I was having this discussion with a friend. For a business like yours, where more and more new investors, right? Money is coming in, pouring in. In terms of every month we get that data, how much of that is coming through? Is the share of direct going higher, Sanjay? And how should one think about that? Is that a risk? Because on the set of the clients that you have, I mean, that of course is sticky money in that sense, right? And you will continue to earn a trail, but on new investments which are coming in from new investors, etc., how much is direct, and is that a risk?
Prashant, I think we believe market is poised for a significant growth, and both, whether you talk about the direct or you talk about the advisor-led business, both the business will grow significantly. However, if you look at when we look at our growth, we always look at are we able to capture the market share in the regular piece of the market, because we do not address the direct piece of the market. In case of direct, Prashant, we need to always keep in mind that all direct is not DIY. They have been either supported by the some RIA or some PMS guy would be using the direct money. So there is a inbuilt advisory cost which is also involved. So if you look at average cost of servicing customer is about 30, 40, 50 basis points in the direct side, and what we earn is roughly about 80, 90 basis points. So I don't think there is a huge difference between two. However, we believe that today country has hardly about 5.5 crore investors, and this number can easily double. On ground, number of advisors are very, very, very less. Prashant, hardly about 175,000 people are there to advise. Compared to that, if you look at insurance industry, only POS number is more than 25 lakhs. So I believe that a huge scope, and as long as you are able to capture your target segment, which is a regular plan, they'll be very, very happy.
So steady state 15-20% kind of growth visibility is there, Sanjay, for your business?
Yeah, because Prashant, we have roughly about 1,060 crore AUM as of 1,060 crore of SIP against a total AUM of about 117,000 crore. So Salana हमारे पास करीबन roughly about 10 to 12% I collect by way of SIP, and if you assume about 10% by way of mark to market, so I think 18 से 20% growth on the AUM side and similar growth on the revenue side can be easily assumed without keeping in mind the market volatility, because
without the extra, so that's a very decent, nice breakup. So 12% SIP and then 10% mark to market. So that gets you 20% clean kind of growth visibility for from here. So that is well understood. So just one more thing. There are financial innovation is also starting, right? For example, this new product which is the SIF, 10 lakh investment. From what I understand from AMCs, etc., is that distributors are, I mean, they're also, that entire machine will start. I mean, distributors have to be trained about the product for them to be able to sell and distribute, etc. Will all this also be, and this product specifically also be a big growth driver according to you? Will Prudent be doing this?
Yes, and so if you look at Prashant, for us, we probably, as we told you, in the 120,000 crore of AUM which we manage, I think the average AUM per investor is roughly about 6.5 lakh rupees. So मेरा मानना है कि my customer base doesn't have an appetite significantly to buy the PMS AIF, but this 10 lakh rupees product is significantly better for us. And I can tell you, we have been doing a lot of efforts to, I think, certify our advisors to get the SIF. Today, country has about 500 plus people who are certified as got the SIF license. I think 160 is by us only. So we've been doing a lot of efforts there. And I think next year is going to be a huge driver in this segment, the SIF segment.
Yeah. I know some launches are happening. Sanjay, I've been listening to the whole conversation as someone who covers personal finance. It's been really good listening into you, because you and, of course, the other distributors, the whole fraternity has done a great service as well. And the fact that it can be a profitable business, it's really a win-win. So it is quite heartening. Just want to understand the margins and how they will shape up from here on. The entity that you've bought, that has higher margins than the margins at which you're operating. And now as the product mix evolves, we are SIF mein jayenge, that's 10 lakh rupees ticket size, and it's more nuanced. It is for more nuanced customers. And I'm sure even the industry will push it in a big way. So I'm sure even the commissions there will be probably better. Not sure if the structure of those commissions has been laid out or not, but I think it'll be pretty much how it's been for mutual funds. So as all of this evolves, what will the margin profile of your business look like over the next year or two?
Overall, if you look at last 2 years, we have some pressure on the remuneration side to my team. So I think the operating expenditure on the salary was a little bit of elevated in nature, which might continue for a year or so. However, operating leverage will be significantly in our favor going forward. Coming to the margin, I don't think that the overall top line will now probably plateau. So today, currently, we have a, let's say, yield of about 90 basis points. I assume that with 1 or 2 basis points here and there, I think the top line should get stabilized and my operating margin gradually should improve. So overall, it's a conducive environment as far as I don't think there is a significant deterioration which will happen, but the improvement will be definitely visible. If you talk about
So if you say improvement in the margin, and this is what our colleagues have been telling us, let's say if we talk PBT margin, then what you acquired, this company, Indus Capital, it's operating at 70%, not sure how. You are closer to 25%. So pick any metric, whether you want to talk EBITDA margin, operating margin, PBT margin, and give us, again, the trajectory from where you are at today. How will it improve? I mean, to what level, over how many quarters?
I think you need to look at both the business separately. We are purely into a B2B where we have 34,000 mutual distributors who work with us, and they are all into a variable model, and we share roughly about 65 to 67% of our revenue with them. While this is the B2C business.
B2C, so higher margins.
There you already have the employees who manages the business, and there is a definitely very high revenue sharing with them. So if you look at Prudent, originally started as B2C, we have roughly about 10,000 crore in 120,000 crore which we are managing as a B2C, and this 2,000 crore is added into B2C, which is a high margin for us also.
Okay, so blended company margin, that's what I'm trying to ask. Blended margins for your company, from where they are today, let's say 4-5 quarters down the line, where will they be? If you can share that number.
I haven't worked on that, frankly, because I think yesterday only we announced. So I think blended margin I haven't worked on, but I think it might be a little bit improvement will be visible on the consolidated level.
All right, Sanjay, very quickly, before we let you go, just to clear the air, the entity that you're acquiring is not coming with any debt, right? Because you're just trying, you've got a very, very good valuation. That's why I'm asking you.
No, I think the mutual fund business, it's a business without any working capital requirement.
Cool. No, just want to...
No liability, no issue.
No, yeah, Renault's team just wanted to confirm that, point number one. Point number two, your market share in the monthly SIP, it's hovering around the 3.5%. Where is it headed? What's the target you have on that number?
I think we would like to maintain the 3.5% of the total, because in the total segment, the direct piece is gradually increasing. So if you look at without direct, in the regular piece, my margin has improved from 4.5% to now 5.25%. And I want to maintain 5 to 5.5% in the regular piece and 3.5% of the total piece.
All right. And for those that were not informed, the reason I started the interview by complimenting Sanjay is because, in June 2025, he gifted around 44 crores worth of shares to 650 odd employees and household staff. So for those who are not informed, that's the reason why we said good acquisition for your shareholders and, taking care of your employees as well. Thumbs up. Looking forward to chatting up with you, sir.
Sanjay, come back more often. Thank you very much. Good luck.
Thank you.
So that is Prudent with Perspective. We take a